This trade gave us 6%. And in this video, I am going to show you the exact process that we follow in order for us to catch trades like this consistently. And I will also show you a way that you can double your money instantly without you even looking at the charts. So if you're new to the channel, subscribe. Let's do this. All right. So in order for you to make money, you need a setup. You need to be able to see the setup forming in your head even before it forms. And so that is what I am going to show you today. Now, if we look at some candles, let's use the 1 minute time frame. It can be very easy to predict the market because let's use the example of these candles here. So our goal is just to predict one candle. So if we look at this last candle here, remember this is on the 1 minute time frame, but price action is price action. If it works on the 1 minute, it works on the daily. All right, so we have this one candle, and this candle gives us this high, or some people might call it a head, and this low, and some people might call it a tail. So high, low, head, tail. Now, think about it. What does the next candle do? Breaks out. So this is the theory. If price breaks out, there's a very high probability that price will continue in that direction. So we would be betting that the next candle, so the third candle, will be going down. But if this candle came down very aggressively like this, but then came back and closed back inside, which we'll see. So our prediction is price will go down. Price does not go down. All right, it's okay. But I want you to notice how the next candle behaves. Look, price went down and then boom, got pushed up. So this shows you that these sellers, they pushed the market down, but there was weakness and it was pushed back up, and in fact it closed bullish. So this gives us a very high probability of knowing where the market is headed the next day, which is obviously I am betting price will go up. So what did price do? Oh, price goes down. Also notice again, price breaks out, fails to close below this low here, and then closes back inside of the range, which means I'm still bullish regardless of what the market does until either price breaks out and closes below this level or price closes above this level. But so far I'm still bullish. So all the candles, I'm expecting them to go up. So I'm still bullish. And look at that. Price went up. So I was still bullish. So here's the thing. This is the exact system that we use, and it's called the failed breakout. Because if you think about it, if this is a candle and it's going down and it gives you like a low like that, if the next candle closes above it and it's bullish, this is what we call an engulfment candle. It can also be called a breakout candle. Point is that this shows you strength, and it tells you that expect price to continue moving up. And our goal is not to predict where all the candles are headed. We just want this one candle. So let's go back to the charts and use this exact principle to analyze the markets. All right, so let's delete everything and then we begin. So we use the 15-minute time frame and we go to settings and then go to events, then check the session breaks so that you have these lines to show you where the daily candle opens and where it closes. And then we begin on Monday. Now, this happened on Tuesday, so we are using the previous week's high. So Monday sets that high, Monday sets that low. So you have your high, you have high, low. Think about it in terms of candle. We have now one daily candle looking like that. Tuesday pins the high, so it breaks out, closes back inside of the range. So if you think of that in terms of candle, it pushed higher, then was pushed down. And then you have something that looks like that, which is called a failed breakout, which means there's a very high probability that the next day price will go down. What happened on Wednesday? Boom! We have price going down. All right, so now this is our new low of the week. This is the high of the week. What does the market do? Market continues, stays inside of the range. So we wait for failed breakouts. So until we see a failed breakout, we do nothing. That is what happened on Friday. Friday again broke out, closed back inside of the range. And remember, it's not breaking out of the previous day's high or low. It's breaking out of the high of the week and the low of the week. You can only say I have 2 lines in my chart, 2 lines. So don't overcomplicate things. High of the week, low of the week. I have not talked about previous day's high or the high of the day, high of the week. Then Friday closes as a failed breakout, which is a sell signal for Monday. And if you imagine it, so it's like we have Thursday giving us a high like that. Well, it's not really Thursday. The high was set on Tuesday. All right. And then Friday breaks out, then it's pushed down. So anything that is not a breakout at the high of the week is still a sell scenario. So we are looking for sells. So on Monday, we are looking for sells. We did not get the sells, but price did not break above the high or the low, which means that our buyer still stands. We are still looking for sells. And so on Tuesday, we were looking for those sells. And so what is the process on Tuesday? Now, this is where the exciting part begins. First things first, everything happens at the high of the week when we are looking for entries. And we use the 5-minute time frame to look for our entries. So this is the exact step-by-step process. Number 1 is time. So time means for Asia, we come to the screen between 9 and 11 p.m. New York time. Then we have London, which begins at 3 and ends at 5 a.m. New York time. And then we have New York, which begins at 9 and ends at 11 a.m. New York time. So once you come to the screen at the specific time, in this case, it's 3 a.m. New York time. So it's the London session. What we do is identify the current high of week or low and low of week. And the current high of week is the highest point price has reached in that week. And this is the high of the week here. And the low of the week is down here. Once we have the high and the low of the week, we do nothing until price comes and clears liquidity up here. So we want to see price coming to this blue box, clear liquidity in order for us to activate our trading process. All right, so what happens? In our timing window, price goes up and clears liquidity. Once we have cleared liquidity, we come back and now identify our levels. And a level is an area where we have 2 or more touches. For example, here we have this 1 touch, 2 touches, 3 touches, 4 touches, 5 touches. So theory is if we break below this level, we will be going down up to the low of the day. Simple as that. All right. Then price continues higher and notice gives us another level here. We have this 1 touch we have this second touch. Meaning, now we can get in once price breaks below this level. And that's what price has done. Price broke below that level. That is our entry. And then you have your stops above the breakout candle. And then you are targeting a 1 to 5. And then you just let the market do its thing. So this one was a good trade. It was an excellent trade setup. And this is exactly what we come to the screen and look for every single day. And in order for you to make money, you need to find the best broker and you need to be able to maximize all the ways that you can make money. That is why I have partnered up with XM. And guys, if you use the link in the description, you don't get a 50% bonus deposit. You get 100% bonus deposit. Which means if you deposit 500, you get 1,000 in terms of the margin that you have. And then you come back and use this strategy. You have no excuse of not making any money in the market. So use the link in the description to get that 100% deposit bonus. And if you'd like to work one-on-one with me, then definitely book a call. Link will be in the description. And then join our school community for the free course. If you got value from today's video, subscribe and I will see you in the next video. Peace out.